Hey, hi guys, welcome to my channel. So, today's topic is going to be the psychological impact on the trades, whatever we take. So, psychological impact on profits and losses, and how we are blocked in a particular trade. So, here I'm going to share my own experiences on how I have been impacted with a lot of these aspects where I make a trade which I am psychologically blocked with, and I have also experienced with other people where psychological factors have been making a lot of decisions for us, in especially in trading, where you are stuck with one thing most of the time. So how do I deal with it, and how I have not completely solved it, but uh, I'm on an aspect where I don't focus on it for a long time. So here is what I have done. Yesterday I've booked losses on Tata Power. Now I have entered the same trade again. I have explained that in my previous video. You can watch that video. But what I was trying to explain there is the psychological impact on seeing huge losses, even though you know that you would be making money. If you are seeing a terrible losses, your mind won't work there, so you're stuck with that trade. So I'll explain with another scenario which happened to other people also. So how I have tuned to this is by in this trade, specifically yesterday's trade, I have booked losses and I have understood the probability of it. So psychology and also probability. So in this trade I was also explaining about the probability of the present trade. So the probability of me going again under losses is if it goes 15% or minus 50% for next 45 days. That is the scope. Again, there are weekends in this and other aspects, but let's not touch there. And I'm not talking about probability here at all. I'm talking about entirely about psychology of profit and losses. So when I booked the losses, right, what I face is the new trades which I'm into, and when I'm diversifying into these trades. So now I have five different things with various legs. Now what I see here is I have diversified myself. Now I am unblocked from my previous losses. That is, I'm clearly unblocked, and whatever has impacted me the most, that I've unblocked. So that way I am in a clear thought process whether the probability will succeed or not. So what actually happens? What There are two methods here. One is called debit and credit. So debit, you can watch debit first strategy and credit first strategy. There are many videos on YouTube. Even I'll make one, but here is the example. So let's say uh, if I do credit first, right? So if I let me keep it simple. If I do profit booking first, okay, so I have got 25,000 profit here. Let's say if I book this profit, tomorrow on the other trades I'll be sitting under losses, that is almost 12,000 minus. So what happens here is my psychologically I will be impacted with that for a prolonged time, that is 1 day or 2 days or 3 days, until this becomes profitable. That is a psychological aspect which blocks people. Even me, multiple times it has blocked, but that limit has crossed, right? After a certain thing, it crosses to everyone, whoever is trading for a prolonged time. If that doesn't cross, and if you are still worried about major losses, that's not a part of trade. That is completely a part of trade. Every day there'll be a loss and profits in trade. So if everyone is not involved in the loss of it, but they have a risk mitigation strategy where they take stop loss, or they have some kind of hedging on top. But here what has happened is, uh, if I'm going psychologically, taking the profits first, so I have booked a profit for this month. So what happens right now is I'll be worried for the rest of the days. So what I have started doing is, basically, if I'm making losses, I'm exiting them fast, and whatever are in profits, I'm keeping them for a long time. And also, I won't say I'm exiting faster, because Tata Power was a was a rare case scenario. this year I had two terrible trades which has eaten a lot of money. I guess one is with Motherson Sumi and the second one is Tata Power, and there was one more company which had impacted a lot, but three times in a year. Okay, where I've screwed up completely, but the remaining time it was really good. I mean, I was in a good position, but let's not even talk about that right now. So when I'm sitting in profits, now I can think straight whether the probability of this ये रहेगा. Okay, this will sit until the stock is not moving. So I've made profit here. So this one, I should I be worried about this? No, I shouldn't be worried, because it's in between the lengths, and it has not gone in the money or anything, so it's not volatile. So I'll sit here. Should I be worried? Okay, on Monday I'll be profitable. So my attitude towards it has changed a bit. If the price doesn't change, I don't have to worry. And now what I can think is, I can close this with this or this, whatever. I'm actually sitting in profit, so I don't have to worry a lot. So the mood of that has changed. So again, I'm vlogging this for myself as well as whoever is listening to me. So these are the two aspects. When I'm taking losses early, I am psychologically in a happier mood, or in a mood of thinking rationally. If I don't take losses first, that is where I am going wrong. So also here what happened is diversification. I have almost 5 trades, each taken with a different aspect of it. So I have diversified in this one. Now let's talk about stock in this scenario. So someone has, let's say, Relaxo as an example. One of the person whom I know has invested around 1 crore in Relaxo. So Relaxo around 1 crore, and the average amount they were sitting was it 1200. So 1 crore there. Now it is almost close to 72 lakhs or something. So what I have suggested to them is just exit in a small amount. That is, if you are trying, you are in a mental block where you won't exit, because your entire amount, your entire thing is stuck in that, and the probability of Relaxo going down fundamentally for me was really high than it going up. I'm not recommending stock or trying to scare anyone, but for me fundamentally, if something is sitting at valuation of 150, he also bought it at 150. There are many people influencers who kept on influencing at 100p, and the stock went till 150p, where the ROC and margins and other things have reduced, and still they kept on promoting the company. That is where everyone, whoever has seen their videos or whoever has seen their YouTube channel, were influenced by that and started buying it. And even at 150p they were still buying it. I don't understand the madness behind it, because almost for many years it was at 50p, which was also overvalued. I'm not saying about overvalued and undervalued, but they got stuck with one stock and they are now psychologically stuck. I'm only talking about the trading perspective. So first of all, if they had diversified, it would have been better. Now the solution for this, if you're completely stuck with one stock, what I would suggest you is to sell around 5% of that, or 5 to 10% of that this month. Okay, and ignore that, take that losses. If it grows, it grows, right? If you believe it grows, that's good. But if you don't believe internally, or you're scared internally, just sell around 5 to 10% and buy some other good company which you are into or which you like, right? And again, there are two kind of people here. One who buy for a company just for the growth of it and making profit out of it. The second kind of investors are basically who invest just in the values of the company and stay with that. For example, Tata Power is one of the companies which I have invested. I am investing in that just for the sake of company, not for the sake of making profits out of it. But yeah, so these are two type of investors. So if you are sitting in the first, even first or second type, you have to actually diversify. So you don't put everything into one thing, even though you completely believe in it. So because you're putting your entire, let's say, net worth into it, that is completely wrong. So to avoid that, what you do is basically sell around 5 to 10% in that. So you buy one of the other stock. If you the next month you think the same, okay, or next week, or whatever is a period for you which works out, whenever you're unconfident, you keep exiting 5 to 10%. That way, you can relax a bit. And this is the main psychological block which a trader or a investor who is not completely knowledgeable should basically do. Exit a stock which you completely are not confident about. So you have to first diversify. If you are, I'm not promoting diversification here, but that is one aspect which can save a investor. And I completely have kept money on that. Thank God I have not lost in that, but I have broken my diversification rule multiple times. So I am not a good advisor to advise on that. But what I am trying to recommend here is basically, once, if you are psychologically stuck on something, you have to break it down into small pieces and get out of that as soon as possible. If you are not getting out of that, if you are stuck on that psychological aspect of trading, you'll be stuck there forever if you continue on the same trade. So what you have to do is you have to get out of that faster. So you have to book your losses much faster, even though it's a big loss or a small loss. If you are still confident on it, only then you have to go. If you're not confident, you shouldn't be continuing the trade. So it's, for me, it is always psychological block. If I'm blocked on this and if I'm not confident on it, I'll try to exit as soon as possible. So that's it, guys. Thank you for watching my video, and if you want to subscribe, please subscribe. Bye.